Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, April 6th DT Reports video update for our YouTube subscribers. This is a very abbreviated video compared to what the full video is we give to our DT Report subscribers, but it's going to give you a couple ideas for a couple specific trades coming up this week. It's not a forecast, but I'm going to describe some trade setups and what the market can do to trigger those trades in markets that you might be interested in trading. So let's take a look at those, a couple of those real briefly. First one we want to take a look at is the S&P. The ES, the daily momentums reached dual look back overbought on Thursday. Friday was a pretty strong update, closing near the high. But what we want to be aware is that with the daily momentums dual look back overbought, we should be within a day or two of making a daily high. What's a daily high? That's a high that just lasts 3 to 5 days, has a corrective decline for at least 3 to 5 days. So it's a tradable high. It's a point where if you're long, you want to bring stops close to the market and even consider short trades. I'm not looking at anything higher time frame from that. There's a lot of technical positions that would indicate it's also near a weekly high, but I'm going to take it as a daily high, and then we'll just see how it morphs from there. So daily momentum's dual look back overbought. That itself says we're within a couple days of a daily high, where we have some kind of at least a correction similar to these last two daily highs, where we're 3 to 5 days or more sideways to down. We've reached the 127, 162% external retracement. That's usually the limits on the upside for a swing like this. Friday was the 100% alternate time projection of the last 9-day advance. And I'm only showing data back to February, but if you bring data up back to the December low, 10 days has been the longest trend we've had without a reversal since that time, 10 trading days. And so Friday was 9 trading days, Monday would be 10 trading days. Just based on that sort of reversal cycle, is that we'd also expect a daily high. So let's go down to the 240-minute data, and this is what makes it even more compelling coming up from just from the March 25th low. We've got an almost ideal textbook Elliott 5 wave. Now, it's only over the last week or 10 days or so. Again, we're looking for at least a daily high, may morph into a weekly high, but look at where we're at price-wise. While our daily momentums are dual look back overbought, and we're in that broader 127, 162% external retracements, we're also in the smaller time frame 127, 162% external retracements at 28.94 up to 29.02. So if you're a S&P trader, you're in an ideal position to be looking for intraday reversals for a potential high that's going to last for a few days and at the least correct the advance coming up from the November 25th low. So fairly minimal probable on the upside before we make a reversal. And what would we normally anticipate? We normally anticipate at least a 50% correction. So let's just put that in. I don't know if that's going to be the high or not. So we normally anticipate that we'd have be sideways to down and reach around 28.44. So, it's quite a ways on the downside. So be looking for that reversal early next week. And ideally, this will complete its daily high no later than Monday, because that's day 10 from the last reversal. Well, here's a second market I think you want to be alert to beginning early next week for a trade that, in this case, very definitely looks to be like a weekly reversal. And this is the gold market. This is weekly gold, and the gold weekly momentums have been a dual look back oversold for 2 weeks. Again, that indicates we're within a bar or two of making a weekly low. What's important here is that this decline from the February high appears to be corrective. And A, B, and this is probably making a wave C. What follows the end of a correction? Well, a resumption of the prior trend to a new extreme. So we are indeed making a corrective low, which is also will coincide with a weekly low. Eventually, gold should continue to advance to above the February high, quite a bit on the upside. And we're very, very close to have completing that low. Maybe it's even complete. Here's daily data for gold. And Thursday was the interesting day where it spiked to a new low, although it came up and closed upper part of the day. And Friday, we made an inside day. So technically, an inside day is irrelevant. It's a day of indecision. It doesn't lend to any technical information that we have. But what we got set up is potentially a perfect 1, 2, 3, 4, 5 in Elliott wave terms into this Thursday low. Now, I don't know if the low is finished or not. We've got a couple time factors, the latter part of this past week into early next week. We've got our daily momentums already made bull reversals a couple days ago, and they're not overbought. That indicate that we should have another 2 to 3 days sideways to up. And with our weekly momentums oversold, it's a very possibility of a dual time frame bullish position to complete the corrective low. What do we want to do? We want the market to tell us that the low is complete. And that would be by trading above what I got labeled a wave 4 high at 12.99 and making a higher daily close. So ignore this inside day bar. And beginning next week, if we trade above 12.99 and we close above Thursday's close, that would be the initial reversal signal that indeed this 5-wave decline is complete, which should complete the corrective decline, which should complete a weekly low. Be on your toes for this because this could end up being a fantastic longer term trade with a lot of upside potential. What's important, minimal capital exposure to participate in it. So it's not a forecast that it's going to happen, but we've identified the specific conditions to enter a trade where we're going to put our stop. And so if we do get stopped out, it's going to be a small loss. Yeah, but if we're correct in the interpreting the technicals at least, that we're at or near this corrective low, boy, a lot on the upside against fairly small capital exposure or risk. This is just the 240-minute data showing you the same thing again. Want to trade above, that would be last Wednesday's high, close above Thursday's close, and more than likely we have completed this 5-wave decline. So that's it for this week. Two markets that are at the cusp of reversals at the minimum, what we call daily reversals, meaning if they give us a signal that those reversals are complete, they should be in the opposite direction for around 3 to 5 days at a minimum. That would be 3 to 5 days down. Stock indexes 3 to 5 days up in the gold, silver, and the GDX. Gold and silver particularly look like any of those daily trends are going to be the beginning stages of weekly trends. That's a possibility for the S&P, but it's not as clear. So take this information, make specific trades early next week if these triggers are made, because I think these are going to be really profitable trades if the triggers are made. Take care. If you're interested in what we talked about, check out our DT reports. Check me out on Twitter. And I hope to be of service to you in the years to come.